Good morning, traders. Welcome back to BCR's Morning Market Outlook. The US dollar index rose again for the second consecutive trading day, and it's approaching the 99 level again. Escalating geopolitical risk and market risk aversion are providing support for the dollar. However, the dollar's rise was somewhat limited after the US Treasury expanded its long-term Treasury bond repurchase program. The first resistance level would be around 99.22. A decisive break above this level will target the medium-term moving average resistance around 99.98. Only a re-establishment above 100 would significantly improve the short-term structure of the US dollar index. On the downside, the low of last week at 98.56 is a key level to watch. A break below 98.56 would further challenge the key support at 98. Next, we have WTI. On Wednesday in early Asian trading, WTI crude oil remains range above $80. The international crude oil market is reassessing the risk premium bought about by changes in the Middle East situation. From a technical perspective, WTI crude oil's recent price change action reflects a clear sentiment-driven pattern. Chart shows continuous decline from the highs, with the candlestick pattern showing a series of corrective movements. Technically, a small double top pattern is currently forming over the past 2 days, with oil prices currently retracing to near the 65-day moving average. Support is currently at 80.14 and around $80, which is the psychological level, which is also the location of the previous downward gap that the bulls recently breached. If the closing price falls below this area, the next target is 77.04 per barrel, and resistance is near 82.12, followed by 85.35. The next one is gold. On Wednesday, spot gold traded around $4,600 per ounce. Gold prices retreated after hitting a more than 3-month high of $4,698 per ounce on Tuesday, as they lost upward momentum near strong resistance around $4,700 per ounce. Gold remains volatile, with bulls failing to break through the important 4,700 psychological level. The RSI indicator is about 70 in the overbought territory, but it's turning downwards. If the RSI breaks below 70, spot gold may further test key support levels. The first support level is 4,550, followed by the 200-day simple moving average at 4,523. Below that is the 4,500 level, and then the 100-day moving average at 4,379 for a renewed upward trend. Gold prices must regain a foothold above the 4,700 psychological resistance level. And last but not least is the Australian dollar. On Wednesday, the Australian dollar outperformed other major currencies, rising 0.2% against the Australian dollar in early European trading, approaching 0.718. The Australian dollar strengthened after higher than expected CPI data, which fueled market expectations of another interest rate hike by the Reserve Bank of Australia. The AUD-USD needs to break above the near 3-month high of 0.718 to accelerate its upward momentum. In that case, the next relevant level to watch is 72 cents, the psychological level. A higher upside target is 0.7273. And short-term support lies at the 20-day and 100-day simple moving averages, followed by stronger support near the psychological level of 70 cents.